Joining me now, Satori Fund founder, portfolio manager, Dan Niles. Dan, first, I just want to get your thoughts. The Fed is back to being the friend of the market.
Yeah, I mean, they've been friendly to the market now, you could argue, since 2008, so nothing has really changed. But you're absolutely right. They're not going through the fastest rate hike in history. They've been on pause now for a while, and we know that it's a matter of when, not if, they cut rates based on what Jay Powell told us yesterday. So, and they're going to cut back on their quantitative tightening. So definitely the Fed has your back if you're an investor in this market.
So I'm loving this move in Micron, in part, full disclosure, because my subscribers own it. Okay? It's always great to have the #1 stock when your subscribers own it. You know what I'm talking about. But also this AI part of it, right? They say it in the first thing they say is it's all about AI. It's turned that company around. So listen, the semiconductors, they've already made this gargantuan move. Are there any bargains in that space at all? You know, Dan is like the best when it comes to technology, but his gear always goes down. We're going to work on Dan's gear. The reason I brought up the semiconductors, they have been absolutely on fire, as everyone here knows. And here's the thing. You hate chasing stocks, but by the same token, you have to have exposure. I don't know where you want to buy any of these things, but I think you have to have some exposure when it comes, of course, to these technology stocks. We're going to try and get Dan fixed, and in the meantime, we'll bring in a different Dan, Dan Flax, who is, again, you talk about someone who, in terms of an analyst on Wall Street who understands this. Dan, I always have to give you props because you have long-term vision. You know, a lot of our guests, I mean, me too. I'm a tech, I use fundamentals. Then I use technology, then I use technical analysis, and then I use a little behavioral analysis. You're more of a fundamentals guy. And I think that helps with the sort of crazy gyrations. I can't tell you this year how many stocks we were stopped out of, and then 10 days later they went through the roof. You don't have to deal with that because you look at the fundamentals. And I want to start with Apple, because Apple's a name that a lot of people are worried about. You got the DOJ action today, other things happening elsewhere. You're not really focused on that, though, are you?
Charles, what we're focused on with Apple remains its ability to execute on their product cycles. Demand in the near term is difficult. China is soft. Clearly, we have there have been rumors around the DOJ lawsuit. We have the news out today. But if we step back and think about how this story, in my view, is going to evolve over the next 12 to 24 months, I think you see better growth driven by product cycles in iPhone, in iPad, which has had a tough couple of years. You'll see new products. Services remains healthy. And so as we look into late this year and 2025, I think growth continues to improve. Most importantly, in my view, this is a story about empowering others. The ecosystem is vibrant.
The ecosystem is vibrant, and the irony of empowering others, that was sort of part of the theme for NVIDIA this week, this AI stock, Woodstock thing. By the way, did it live up to the hype, this AI Woodstock?
It did, and what the company has demonstrated time and time again is the ability to innovate with the chips, with the software, continuing to attract new developers and really broadening their reach. So if you think about manufacturing environments as one example, you have digital twins. Right. And so that helps to really transform, say, how automobiles are built. Think about drug discovery, climate change, fraud detection, a really explosion of use cases that NVIDIA really sits at the heart of.
And we've got here, folks, the so-called Magnificent Seven. One of the things they all have in common is that they're all sitting on a ton of cash. We've got Dan Niles back. Dan, I want you and Dan Flax to kind of share the stage here, if you don't mind. You've talked more recently about the Magnificent Seven being the Magnificent Four. Let's talk a little bit more about them because, again, when we were talking, I was talking semiconductors, but the frustration for many is where do I go? What if I've missed it all? Where can I find opportunity still at this stage of the game?
I think if you look at this longer term AI, you only had ChatGPT burst onto the scene in November of 2022. So we're 14 months or so into this. And if you go back and do the analogy of the internet, when Netscape came onto the scene at the end of 1994, the first 14 months into that rally from the end of 94 through February, the NASDAQ was up 47%. But to get to the peak, it closed up 571%. So you're really not that deep into this because it took the internet bubble 5 years to reach its peak. Not to say that there weren't pullbacks along the way, but I really think if you want to participate and you're honest with yourself and you say, ignore the stock prices for a second and look at the fundamentals. NVIDIA is a rare company of names that have beaten and raised for over a year now. And it's only trading at 40 times earnings for 90% revenue growth. So it's actually, believe it or not, despite the fact that the stock's up so much over the last year or so, it's still one of the cheapest ways to play the AI trend because they're gobbling up market share, whether it's microprocessors, GPUs, networking chips, et cetera, and they're really at the heart of it. And so that, to me, is my exposure to the AI trade for however long it goes on.
Right. And Dan Flax, I've got the table up here. They're all sitting on a pile of cash. So they're not worried about, debt walls and maturities and all those sort of things. But to Dan Niles' point, I remember, I think it was 2008, NVIDIA was on the cover of Forbes. It's the company of the year, right? It promptly went down 90%, stayed that way for a decade. Now they're all really getting their thing going. Do you still like all of these names for the most part?
We continue to own all these names, Charles. It's driven by the innovation, the aggressive levels of investment. Think about Microsoft or Google, Amazon. They're investing tens of billions a year in capital expenditures and R&D, and that is in turn generating huge amounts of free cash flow. But the key for these companies is to experiment, extend into new markets. Not everything's going to work.
So Dan, for you and our audience, ride the waves. The periodic times they may fall out of favor for a quarter or two. In your mind, hold on to them if you are a long-term investor.
Correct. Selectively find the names that offer the most risk or most attractive risk reward over the next 12 to 24 months and buy those and accumulate them over time.
Hey, Dan, I want to give you, Dan Niles, I want to give you props. There's a name you mentioned on the show in late October. Impinj, PI is a stock symbol. Here's where you liked it. Here's where it is right now. And the reason I love when you come on with these sort of ideas is you're moving out, you're moving away from everything everyone else is talking about. One of the things I've been trying to underscore, there's a lot of ways to make money in a bull market like this. Do you still like this name? And there are other theses out there that you're working on like this?
Yeah, I mean, we're trying to look at areas outside of the names that everybody talks about all the time. And Impinj is a great example of that, where they're in the radio frequency identification market, which simply is you put a chip on anything you ship all around the globe. And you're only tagging less than 1% of those items. And now you've got chip technology come down so much that I think you've hit an inflection point. Amazon actually adopted this technology late last year after looking at it for probably a decade. And so I think you've gotten to that level where you go, wow, this is a market that you could see 20% plus revenue growth for arguably the next decade, and you're still underpenetrated. And Impinj is a market share leader with 45% of the market. And oh, by the way, they won a lawsuit where they're going to have to get their technology licensed by the other guy who has the other 45%, which is NXP, and it's massively accretive to EPS, and nobody's ever heard of this company. So that's the type of stuff we're trying to find where it's not the same thing everybody else owns, and someplace where you have EPS leverage, because quite honestly, a lot of that Magnificent Seven, you've got several of them where numbers have been going down for over a year, and you've been lucky because the Fed's been on hold.
Yeah, and by the way, NXP was one of the rare IPOs that worked out last year. It's a name probably worth looking into. We had a snafu here. You can Google what that really means. In the meantime, I want to say thank you to both Dan Flax, Dan Niles. You are two of the best, so we're lucky to have you kick this show off. Thank you both very much.